Hello, welcome to Smart Investing Market Insights. I'm Krista Das. First, we saw the markets lose more than 10%. Then, we saw them recover almost 8%. Is this the real market or the last carnival ride of summer? Seriously, the analysts are all over the map here, with some predicting ultimate doom, while others call for a major year-end rally. Wave Strength Option Weekly's market analyst Adam Lass is well known for his timing predictions of both the 2000 top and the 2003 bottom. So we've brought him on to see if he can straighten out all of these conflicting signals. Adam Lass, welcome to the program.
Always glad to be here, Krista.
Adam, what are we to make of all this volatility? Do you see this action as a buy sign, or is it time to bail out?
Well, it certainly has been a wild ride of late, and for some time I must admit I was skeptical, but in the past few days I've seen some of the most bullish indications of the past year. We just might be in for that year-end rally after all.
What are you looking at that has turned you around like that?
Well, Krista, let's start with the underlying situation. For the past 20 months, there's been a bit of a mystery in Washington, D.C. I'm speaking of Fed Chairman Ben Bernanke. Unfortunately, Bernanke inherited an overly bright spotlight from the previous two chairmen, Paul Volcker and Alan Greenspan. But all the new guy did for the first 2 years was execute two small rate changes that were already in the pipeline, and then put a series of three-sentence statements out assuring us that if there were ever a reason to act, he would think about it. In the meantime, crude oil skyrocketed, but no action. Inflation creeps up, no action. Housing collapses. The economy stalls, no action. Wall Street really started to wonder if Bernanke was asleep at the wheel.
And we all know that Wall Street hates wondering.
That's right, Krista. They can work with good news and suffer through bad news, but uncertainty makes them crazy. And when they are uncertain, share prices go down. Well, then came the big banking crisis, and suddenly no one was sure if there would be enough cash to keep the wheels greased. But when the banks picked up the phone and called C Street, Bernanke acted quite quickly, dumping billions in the banking side of things and dropping a key short-term rate. Now we know who Ben is. He's a central banker, first and foremost.
Is that it? Is that all it took to turn you from a bear to a bull?
Oh, that's just the setup, Krista. Here's the good news. In the past few days, we've heard that our gross national product came surging back last quarter, growing at an annualized pace of some 4%. Now, this is perhaps the most critical piece of the puzzle. You see, inflation has been hamstringing the Fed a bit. The most fundamental definition of inflation is currency in circulation versus GDP. With GDP flat, the Fed simply couldn't lower rates without plunging the dollar's value. But now that we see things moving along a bit, the Fed has a lot more leeway. So now when Mr. B pledges to do what it takes to keep the system liquid, like he did again on Friday, we can have some faith that he has both the intent and the ability to act.
So where do you see the market going?
Well, frankly, Krista, the technicals are indicating that investors are quite enthusiastic right now. I think it is quite possible that we could see new highs for at least the blue chips by the end of September or the beginning of October. And Dow 14,500 is certainly not out of the question by the end of the year. And well-played call options could leverage that 8% move into triple digits.
Wow, that is a turnaround for a perennial bear. If you would like to learn more about the option plays Adam is speaking of, you can find more on Wave Strength Options Weekly at taipanfinancialnews.com. Thank you for watching. Until next time, here's to great profits from smart investing.